has published a book, a crypto trading guide, which is to do with smart money concept. It is just $25. You get yourself a soft copy. So as we learn this skill, the book will help you to see the setups, because he told me that even if I'm going to teach, I'm going to reserve some information for only those who will take a step and buy the book. Why? Because in that book, there are certain setups that you won't find anywhere, that you won't get from these teachings. So you can contact Leader Kenneth. Leader Kenneth, you can put your number in the comment section, in the messages, such that a person can contact you and get a copy of that ebook. It is an ebook. You can get the ebook, you can get a hard copy, but if you're outside Uganda, you can get a soft copy at just $25. Guys, $25 is just tiny investment when we come to your financial life. Just invest $25. You get, if you're on YouTube, let me share my screen. If you're on YouTube, make sure you contact him. It is a WhatsApp number. Just put the code +256. Okay, if you're on YouTube, make sure you contact him at this number. Just put the code +256 where there is a 0. Okay, where there is a 07, make sure you start with +256, then 707, like that. Make sure you put the country code. You contact him on this number so that you can get yourself a soft copy of the Smart Money Concept book that goes into much more details than what you're going to get on these Zooms. It is true, you're going to get information which is going to help you trade. But if you want to be professional, if you want to go all in, please make that dollar investment of $25, make that investment into your financial future, and you get that money, and you get that book, which will help you get strict setups that you can use. He has told me he will only reserve such strict setups for those who will take a step to make sure they grab that copy. So he's going to give us the information for free that can help you start off. But if you want to go into deep details, if you want to go ahead and get a lot of information, deep dive, make sure you get that copy. Also, second, he told me he offers one-on-one. He offers one-on-one. I'm saying this because, not because I'm making an advert for him, but I know him. He is a trader. He's been trading futures for the past how many years? I don't even remember. But he's a guy who knows what he is doing. Okay, he has taken trades where he has made 20% return, 20% TP on, imagine, on a bit on BTC. He sees that BTC in the next few months it is going to have a big move. He predicts the right direction using smart money concept, and takes a trade which delivers 20% and above on BTC. So I know what he can give you. So if you want one-on-one session still, you can just get that number, just put a +256 code, get that number, and reach out to him. He will give you one-on-one at a fee. I don't know, you will discuss about the fee. Then for those of you who want the YouTube channel, it is called Earn Money Online, the easy way. Earn Money Online, the easy way. Let me show you the YouTube channel before we move. Let me show you the YouTube channel. It is called Earn Money Online, the easy way. This is the YouTube channel where you can catch up. In case you didn't join the Zoom, you can catch up the lessons from here. Just come on View Channel, then you come on live. When you come on live, you'll see that you'll be able to get all the lessons. As you can see on Smart Money Concept episode 1, we are already live. So you can get all the lessons, follow up all the lessons from here. So that said, I welcome, let's join our hands together. We welcome our leader, our trainer for today, and the person who will be taking us through smart money concept from foundation to intermediate level to experience level. Let's join our hands together and welcome leader Kenneth. Where are the hands? You guys are so mean. You are so mean. This energy that is here.
They don't know what
It
is
means
coming.
you don't want him. People don't want you. Maybe you go back and we close the meeting. You guys are so mean. Imagine someone sacrificing time to teach you information for free, but even hands you cannot. You are feeling yourself. Anyway, I know Lidaken is not a person who is so proud. So I know he will continue and teach, but if it were me, I would have gone back by now. I said, goodbye. I going.
I going.
Anyway, well, can take over, please.
So good evening, ladies and gentlemen. My name is Kenneth, but most of the times I use Kent11. It's Kent11, Kenth11. I've been in the financial markets for some good time. It's now close to 3 years. The real business, not this scam that people are always into. I've also been there because there is no one that has come to the financial markets, the actual financial markets, without first testing the other part of the financial markets. It's replicated, okay, part of the financial markets before you get to land onto the thing that is actually done by many of the people and real, in the sense that you're not going to lose your money in anything, but instead you're going to learn a skill and multiply that money, which you will have in control. Okay, so I've been in the financial markets for so long, I think close to 3 years. 3 years, I think it might be 3 years. Uh, in all those years I've been in the financial markets, I've been trading more of futures, to be specific, crypto, but the futures part, not the spot, but the futures part, more of the futures part. I've tried forex, but it didn't work out the way I expected because I wanted something that is diversifiable, only to find that crypto was my way to go. Okay, so I've been in the financial markets for all that time. I've been trading using the SMC, the smart money concept. Okay, whereby in the smart money concept, that's a trading strategy that allows you to trade like someone who has big money. Any entity, any institution that has big money is called a smart money. Okay, so when someone comes in and says smart money, just know they're referring to the banks, to the hedge funds, and all those big institutions that are involved into financial markets. Okay, without wasting time, I think I should share my screen and we start right away. Okay, content, okay, let's share. Let me share. Do you see my screen? Does any of you see my screen?
Yes, your screen is on. Your
Yeah,
screen is on. Okay. I'm
let me
also
go
going to
there.
give you host powers here. Let me give you all the host powers because I see my okay. So officially you're now the host of the meeting. You can close it
Okay.
anytime you finish.
Okay, please. Thank you. Now, before you get into the financial markets, you have to understand that everywhere there is money. Okay? So it's up to you to learn a skill that is going to allow you to scoop off some of the money that is in the market. Okay? To scoop my screen. Okay. It's clear. I think I'm in trading view, right? Hello. I just need someone to confirm with me if I'm okay. So good. Now, if you are to trade in the financial markets, you first of all need to know where is the money. How am I able to scoop off a portion of the little money that of the big money? It's not little money. These are trillions. We are operating in markets of trillions. You have a chance in a way that when you're in these financial markets, you have access to around 5 trillion in every day, which has never been in our physical businesses. But when you're in the financial markets, you have access to 5 trillion every day, of which they just say, have a skill, scoop out what you can, and then leave. Let the market give you let the market give you what it gives you, and you move on. Okay. So we have three major market moves, okay, of which one is an uptrend, a downtrend, and a consolidating market. Each of those markets have a significance, have a pattern that show or prove the state in which the market is, and you're supposed to come and follow that state, or you're supposed to come and follow the flow of the market so that you can scoop out what you want to scoop off. Okay, look at this. This market is like a river. When you position yourself well, you're going to get the money you want very well without taking risks. The risk you take is always partitioned proper, and you know how much you're going to lose if you enter from a certain position. You know how much you're going to make if you enter from a certain region. Without no further ado, let's dive into the market that is in an uptrend. Okay, we have this. We are going to start with the textbook structure of the market. Okay, the level 1 structure of the market. This is an uptrend. Now we have this as a consolidating market. Okay, then I'm going to give you another sort of market we see. These are the only 3 patterns in the market you will ever see. There is no any other market that you ever see flowing differently from these 3 unless you invent yours, which is impossible. Right now, let's start with structure 1. When you look at structure 1, there is something. We have this point. Let me mark it as 1. Sorry. Let me mark it as 1, 2, 3, 4. Okay. Just for proper, sorry, 5, 6, 7. Okay. Now look at this. In an uptrend, can you please have a textbook where you're going to write this stuff? If you don't have one, please look up one and get to note these things, because this is where the market begins. If you don't understand this, then I don't think you'll be in position to understand the psychology behind everything I'm mentioning here, or everything I'm talking about now. The textbook structure of the market is always like this. When we have an uptrend, that will be proof that this is an uptrend. If we are in a consolidating market, that means there is proof to show that this is a consolidating market. If you're in a downtrend, there is proof, there is data, because it's already there. It's up to you to interpret it. It's up to you to converse with the market, okay, so as to get out what you need. All you need is money. So it's up to you to know which conversation am I going to speak with the market so that I could scoop out the profits in the market. So when you look at this structure, we have this as a swing point. Sorry, we have this area here. This is area 1, level 1, 2, 3, 4, 5, 6, 7, and 8. Okay, we have our 8 here. Now, when you look at this, when you observe this, it's formed in a way that it is going up. It is continuously going up. Okay, now when you wake up early in the morning, to those who are in Uganda, 7 p.m. sharp, you come to trading view, open it, you find something that is more likely to look like this on the real charts. We're going to go there later, right? Now, you're going to find that at the highest point, the market came, okay, from 1 to 2, then it had a retracement, okay? This 1, 2 is called a pro trend, okay? Now, this is called a counter trend. They have very many names, okay, but for now you can take pro trend and counter trend, or you can say it's a Larry, then this is a pullback. Okay, this is a Larry, then a pullback, a Larry, a pullback, a Larry, a pullback. You can just use any term you feel like is comfortable for you. Okay, now when you look at point 1, This point 1 made a move upside. Okay, the market, we are buying. Okay, when we bought, we reached to an extent whereby the buyers, when you are buying, these are the buyers. When you're selling, these are sellers. Okay, when you're buying, the market goes up. When you're selling, the market goes down. Now, the buyers got involved at point 1. They pushed the market at point 2. When they got to point 2, now the sellers came into the market. They got what? They got involved into the market. They also wanted to make sales. They made sales. When they made sales, at a certain point T, point 3, the buyers still came into the market. When they came into the market, they pushed this price past level 2. Are we together? They pushed the market past level 2. Okay, this was 1. They entered here. The buyers took over the price up to this level. Okay, they entered from here. Let me increase the pixel so that it can be clear. Now, the buyers entered within here. They took the price from point 1 to point 2. Okay, when they got to point 2, now the sellers also got what? Involved into the market. They pushed the price down to point 3. Okay, after getting to point 3, then the buyers again got involved into the market to push the price from 3 to 4. All right, so when they push the price from point 3 to 4, it surpassed the level 2, which was our previous high. That was the previous area where the price got to. All right, this was our recent price, the highest price we had got before we saw this coming through. Now, when the price goes above the recently created high, okay, we call this position a break of structure. The break of structure comes here. Okay, the break of structure comes here. Now, look at this. It is continuous from point 1 to point 2, point 3, point 4, not this point 5 coming below point 2, but it is within the range. Okay, look at this. It is within 3 and 4, like this. This is where a 5 is. It's not getting below 3, our recently formed lower high, right? Now, it's getting above our recently created high, which the recently created high is 2. Okay, so it has to come and surpass 0.4. When the market goes from point 4, it surpasses. Now this is 0.6. There is proof that market is moving in an uptrend, because this is 2. The market came through down, had a pullback to 0.3, then it surpassed 0.2 by a break of structure. It pulled back, okay, to 0.5, and then 0.5 pushed the market and surpassed 0.4. Okay, then after surpassing 0.4, it created 0.6, had a pullback, and then surpassed still the pullback. On pushing up, it surpassed 0.6 and went to 0.8. Okay, now whenever you have such a trend, the recently created high is now 8. Okay, what do we expect? We expect the market to continue going up. Okay, to continue going up. That means we're expecting, and we are very sure that the market will have a pullback and then continue to surpass this 0.8. Okay, that is proof when we have continuous break of structures to the upside. Okay, continuous break of structures to the upside. Why am I calling it continuous break of structures to the upside? Here is the reason. Now, when you have point 1, 2, 3, now this is a structure. From this point to this point is the structure. That means when you draw, like when you cage this structure, okay, and you very well know or assured that the market will come and go past this line. When it goes past this line, the recently this high that was created here, when it breaks the recently created high, it becomes, that's why we call it a break of structure. When it goes past that cage, that becomes a break of structure. Okay, when it breaks structure and makes a high at this point, okay, like at this point, still we will have another structure, of which the structure is between this point and this point. Let me draw here. Our structure will be this. That's a structure, that point, and this point. Okay, so when you cage this still, now leave alone from here, this was broken, not so? It created us another cage. When you cage it still here, you're waiting for the market to push down to have a pullback and break above this point. That's why we call this line a break of structure, to confirm that the market is continuously going up. Are we together? Are we on the same page? Are we on the same page? Right, let's move. Now, when we have continuous break of structures to the upside, as it is proven here that when you have continuous break of structures to the upside, that is market is in an uptrend. So this is one type of a market. Another type of a market is this, a consolidating market, whereby if you cage from this point to this point up here and run your cage through, okay, this market is not making any break of structure. Like it's not going past a certain level, it's not going past a certain price level. Okay, you see, when we draw the line, it's just getting resisted. It comes, boom, pushes down, comes back, gets resisted, pushes down, comes back, gets resisted, getting down, goes up, comes back, gets resisted in every corner, whether up or down. When it goes up, it's resisted by this blue line. When it goes down, still it's resisted. In short, it has no sense of direction. It's just within there, within that range. Okay, that's called a consolidating market. Now, apart from these two, we have the last one, okay, which is beneficial to the futures market, in a way that you very well know that in the futures you can either buy when the market is going up, you can make profits when the market is either going up or moving down. In any direction it's taking, you can make the money. Now, when we come to the market that is in a downtrend, okay, this is just a textbook structure of this market going in a downtrend, or this market being in a downtrend. Okay, that is textbook structure. Now, when you have these points getting broken, okay, like this here, then you get another one. This is proof, this is the data that you track to know what you're supposed to do at a given time in the market. Not seeing one candle red and another one green or blue and you're like, oh my god, the market is going to the south, so I have to sell now. Oh my god, no, you don't need to panic, because there is proven data that you have to follow so as to have the right entry and the right exit point in the futures market. Leave alone the spot market. The spot market is different from the futures market, regardless the assets being the same. This side you're trading contracts, the other side of spot you're owning real assets. Now let's proceed. When you come point one, like this is a high, this is a low, this is a higher low, lower low, okay, lower low, then break of structure. When you break structure, then the market pushes back a little bit and comes back to break this point because it's a continuous pattern. Now, when you get here, still the market will do this. Watch closely. Will push up and then come down like this. It will do this thing very many times, like every day, 24 hours, 24/7, because crypto does not rest. All other financial markets could rest, but crypto, it operates 24/7. Now, after looking at all this, okay, after looking at all these, the market never moves in fractures. The market never moves in separate partitions as I have did it here. The purpose of doing this is to show you how different they are. Okay, that will help you to understand where am I going to buy from, where am I going to sell from, is this the time for selling, is this the time for buying, where am I supposed to enter, where am I supposed to exit. Okay, now here is the combination of all those markets in one picture or in one trend. Let's take this off. Now let's bring the market in one format that it actually moves in. The real picture of the market. The market comes 1, 2, 3, like this, continuously going up. This is proof that it is going up. To some point, it starts doing this. You can see it very well from the charts. To some point, it starts doing this, then it goes down, continues going down like this, like this. Then to some point still, it starts going up. There is no one that can determine or can order the market to go either up or down. But what it's doing, you flow with what the market is doing, because the people that are making this market flow the way it's flowing have more money than you. If you put in $100, someone is putting in 500,000 in one position. So that means that person will buy your order 100 times plus in a single row. Okay? So it's up to you to identify the flow of the market and then flow with it. Don't invent anything that is not supposed to invent. Money in the market is called liquidity. They always say that if you flow, now you see here, it's beeping. Money is beeping. Hey, I'm kidding. Now, let's move with the structure. When you have a low, you get to have a high here. You have a pullback, then to some point the market starts moving up like this. Your target or your aim is the market to come and break this point. When it breaks this point, it's called a break of structure. All right, now we still proceed. The market makes a lower high, a higher high, another high. It's called, this is a low, this is a high. Okay, this is a higher low, this is a higher high, another higher low, another higher high. Why do we say it's a higher high? It's a higher high because it is higher than the previous high. Okay, it is higher than the previous high. It gets to break structure, creating a higher high. Now, after creating this higher high, the market still moves, moves, comes down, then goes up, creating another higher high. Why higher high? Because it is higher than the previous, but not this, but the previous. Okay, than the previous high up here, then causing this to be a break of structure. Okay, now what do we expect? As we all know that for this market to continue going up, okay, maybe you've come to the market at this time when the market is here. Okay, now you're going to say that we expect the market to come and break this line as our next break of structure. But when it pulls back, it starts playing from around here. Okay, it starts playing from around here. It's not either moving up or down. In short, when you try to cage this area, okay, you're going to find that the market is not going up, it's not going down, it is instead consolidating, being rejected at the top and at the bottom. The ceiling, it's not passing, phasing out of this ceiling, and the bottom, it's not getting past this region below. Okay, now look at this. You go, the market comes here. Now this is the other part of the consolidating market. You cannot take any trades here. Okay, you cannot take any trades here because you cannot buy, you cannot sell. When you sell, it may come back to you and it buys you out. When you buy, it might sell out you because we have no sense of direction. There's no direction. We're doing what? We are taking. Now, when you look back at this point, you have this region and this region. There are terms that we use. Okay. Now, in the smart money concept. Now, this area, okay, this area, sorry, let me just shift this here. This area, okay, when you break structure up here, then this area, this recent or the lowest point here that led to the break of structure here up, this point is called a protected low. And then this is a weak high because we expect by hook or crook the market to come and break above here, which is not a must. Okay, but that's our expected next move. If it doesn't happen, please don't get mad. Now, when you are here, we expect the market to cross. We are going to engage. We are going to cage out this area. Let's cage it out. Now, we are expecting the market to come and go past this level. Not so, to have another break of structure. It has not yet got there, but we expect it to get there. And we mark this point as our protected low, this area. Okay? So, as we are waiting for the market to make a proper pullback, to come and surpass this region, it instead surpasses the one below. Okay, as we are waiting for the market to come and get past this region, it doesn't get there, but instead it comes and gets below our protected low. Here was our protected low still. Okay, and here was a protected low. But when you look closely, when you observe, this market has been coming from like 1, 2, 3, 4. This pullback down It couldn't surpass this region, but it surpassed this other one, the one on top. But then, as we were moving, now the market surpassed the one below, not the one on top. What does it indicate to you? That indicates that the market has shifted from an uptrend to a downtrend. This line would be our break of structure, but it did not happen. What happened? We got a market structure shift or a change of character. The character in the market here was an uptrend. The character from our character from here to here was an uptrend. Indeed, we were expecting to continue up, okay? But as we were moving along, the market decided now to go down. Remember, it was in an uptrend and it's now shifting from being in an uptrend to a downtrend. How do we confirm that? We always move with protected regions where we feel the market should not surpass for us to continue going up. For example, here, we were not expecting the market to come and cross this line. If it does, no problem. What is the problem? More money you're going to make. The problem comes with the more money you're going to make because you've been targeting where am I going to enter from, and now you have a point whereby you've been looking for buys, the market has shifted, you're going to start looking for sales. As simple as that. Here, when we are in an uptrend, you don't place the sell button. When we are in an uptrend, we do not place the sell button, but we instead place the buy button at the right time. And not every time you see in an uptrend you buy. No. You need to have a reason to ask why you're buying. All right? Now, when we get to below here, we have the so-called a change of character. We have two things. We have a break of structure. We have a change of character. A change of character has very, very many names. You can either say it's a change of character. You can say it's a change in state of delivery. You can say that it's a market structure shift. Any of the two. Any of the words you can use. You can even invent your own word. Okay? But so long as its point of application is valid, so long as the purpose you're naming that name is valid, no problem. Let's proceed. I always call it a market structure shift. It is marked by M. Market structure shift, I always mark it as MM. Now, when we get a market structure shift, that means our protected law has been disobeyed. What are we looking for? We are now looking for sales. Okay, now when we look for sales, the market is creating proof. It is proving to us that it is in a downtrend. How? It is creating these points that are breaking here. Now, this becomes our high, our low, our higher low, lower high, not higher low, lower high, then lower low, lower high, lower low. Huh? Right, pa? Now, this is the pictorial movement of the market. It never moves in any format apart from this. This is something you're going to find the market respecting in Uganda, the market respecting in the US, the market is going to only respect this. There is no any other movement you will ever meet in the markets apart from this. Okay? apart from these movements, there is no any other market movement you will ever get to find. This is how it's going to move all the time. Monday to Sunday, this will be the movement. Okay? Now, as we proceed still, we have this point as a break of structure. Okay? When you have this point as a break of structure, that means the recently created lower high, this, the price of the market, of the price of an asset doesn't have to cross it. Okay, it instead has to cross this area below. Okay, for us to still have a continued downtrend. For it to be continuous, it has to break this, not this. All right. So when you get into the markets, you need to know, where am I supposed to cross? Where am I supposed to not to cross? Where am I going? Who is in control? When you don't understand who is in control, they will control you. If you don't understand who is in control, they will control you. Now, this is a combination of all market trends, and that's how it will ever move. January to December. That's what we do. What? That's a combination of all market directions. All right? Are we together? Are you in, guys? Give me one in the chat if you're in. All right. Sorry. Let's reduce this. Let's minimize this. Wow. I like this view in. Let's go. Now, when you get to this point, there is a region you're supposed to have your entry. There is a region you're not supposed to have your entry. Okay? When are you supposed to have an entry? Before you even get there, understanding market structure is the first win. Understanding where the market is going is the first profit you're making before you even start making the liquid money or the money you're looking at making. You understanding this, the market structure, is very important. Okay? If you understand the market structure, that's the best thing you can ever do before you even start trading. All right? Let's move. Now, when the market is moving, this is the textbook structure. Now, let me give you the actual structure of how the market moves. Because if it was as simple as that, then none of us would be here to learn. Jude, please stop writing my screen. If we were here, Jude, this is the last time I'm saying this. The next time I'm going to remove you out. Okay? Because you're distracting me up. Now, I'm going to give you the way the market moves, because you at times look at your charts and you're like, what is happening here? All right? In an uptrend, you're going to find something like this. One, Kindi, please. I'm going to get you out of here. This is how this market moves. Okay. Now, when you see such, or when you come to the market and see these things, or you see the market moving like that, what are you supposed to do? It is very simple. Your duty is to come and mark out these points, the major points. We have this point, okay? And then we have this other point up here, okay? When you try to cage these points, okay, you wait for what the market will give you. It will prove to you that it is either in a downtrend or in an uptrend. When it gets past this upper region, you marked here, you marked up here, you drew your line here. This is the break of structure you're waiting for. This is the break of structure you get. That means this market is in an uptrend. Okay? This market is in Ivory. Please stop writing in my screen. Now, you have this point 1, 2, break of structure. You come back and map afresh the last or the recent swing point or this point. I don't know how you're going to call it, but the last swing point or the last week in that price leg. Now, here you come back and map this region. Okay, when you map it that like that, you come and cage it. When you cage it, if price escapes above this line, you're having a break of structure to the upside. When it goes below this line, that is called a change of character or a change in state of delivery. That means it is from an uptrend to a downtrend. Right? Now, let's proceed. You mark that point. Okay? You wait for the price still. When it breaks structure, when it gets a break of structure, now your other point is here. Your lowest point is here. That was the lowest point created in the market. It is here. Now, your highest is here. All right? Now, when you still cage out from this point to this point, you're going to find that the price did not go below this line, but instead it went above this line. Okay? Are we understanding these things? Hello? Are we in? Are we getting these things? They are very simple. Don't complicate the chart. These are the simplest things you can ever do. If you miss out a point and go onto the wrong side of the market, that means you are going somewhere, but you've taken another route of which you don't know what is at the end. It will not take you to your destination. All right? Now, let's move. Look at this. When we revert or when we reverse this, it's a true story to a downtrend. When you, oh, sorry, it cannot. Now, this state will still be applied to a downtrend. Okay? It's a matter of marking out these points. You have this like this. No, please. Deny. Don't record. It's already on YouTube. You go. Same story all the time. If you're able to sit down and discuss with the markets, it will talk to you silently. This is a language it speaks. If you understand Kiswahili, the market will speak Kiswahili. If you understand Luganda, the market will speak Luganda. depending on how polite and patient you are, to let it learn your language or you learn its language and then move together. You people, you don't know how good it is to come to the market, you see what is happening, you get patient, and at a certain point, you place either a sell or a buy, and it gives you good profits. Because look, when you're into financial markets, let me give you a secret. There is something called a risk to reward in financial markets. If you're not using that rule, you can never, you will never be profitable. I'm going to explain that at the end of this lesson. Okay? We still have a few minutes to end the lesson, but if you don't use such, there's some things here in the cryptos, especially futures. If you don't do them, then Simon Chisacha, please leave my screen. Now, still the same thing. Break of structure, right? Proving it's a downtrend. This is data that is proven. It is a downtrend. So long as it doesn't surpass the upper. Okay? When you have one and you have this area, you come down. This is a high, this is a low, lower high, lower low, lower high, lower low. Okay? Then you cage it out. It breaks structure. It doesn't go past this level, the last structure created here. Okay? Now, when it pulls back, there is a reason to ask why it pulls back. There is a reason why you don't just enter into the market, but you wait at a certain point to come and fill your order from there. We're going to learn about those as we proceed now. Look at this. We proceed now. Break of structure. Mugambwa. Please stop that. We go. We still move down here. Okay. Now we are continuously breaking structures to the downside. If you ever place a buy button in a downtrend, you will see the money go, you see the money fly, you'll be frustrated, you'll be like, these things, my God, these things. But it's you who doesn't have the flow. It's you who is not flowing with the river. It's taking south, you're taking west. You will drown. All right? But if you understand, where do I enter from the river? Where is the hump? I don't know if in the rivers, those who sail on water, I don't know if there are humps. Okay. Let's move. You want charts, but if you don't understand this, you will not understand the charts. Now, the downtrend will at some point get to have its end. How? When we have this. So it is not moving. That could be the problem. Okay, the data is down here. Now, this market or this downtrend will change or will have to end when we have the price not doing this, okay, to break this structure, but instead it changes character up here. When it goes past this level, I assure you, please stop looking for your sell buttons. Start looking at that green button. Okay? Start looking at that green button. I would like to take you through a few of these structures on a live chat, and this is how we're going to do it here. Sorry, we're going to do it here. Let's do it here like this. Let's get this off. Then let's come to the real charts. Okay, let's get to the real charts. And this screen is becoming small, but just bear with it. We are going to now when you look so closely here, okay, you're going to see that, let me put 4H to be better than this 1H. Tech, please leave my screen alone. I want to take you through these steps. Now, when you look here very keenly and close, okay, you're going to find that we had this area, okay, as a break of structure. And you having a valid, because there is a valid and an invalid break of structure. Take note, there is a valid and an invalid break of structure. All that valid and invalid break of structures are well written in the book. Let me show you. Let me show you, give you a sample of what it is, whether valid or not valid. Okay, it's very clearly stated in this book. Can give you an example. It's on page now. For you to have a valid break of structure, okay, you need to have a candle close this break of structure. You look at this. I need you to look closely. We have two photos or two pictorials. There is this whereby this line closed onto the body. Nega, please leave my screen. Nega, please, no. What you're doing is wrong. There is this candle that is closing here. Are you seeing my screen? Is my screen visible? Okay, right. Now, there is this candle closing above this swing point, and there is this candle here that did I sorry, the candle is here. Look at the red arrow. There is this closing below that, like when you draw this straight line that would lead to a break of structure, the candle there is not closing above this swing point. This is not a break of structure. A valid break of structure is when the candle closes. It's when the candle closes above this swing point. Okay, now let's go here like this. You look at this. This is a valid break of structure. Okay, now when it's valid, we have this other point. This is a valid break of structure. we're expecting this market to come and cause another break of structure up here. Okay, because we are now in an uptrend. How could I trade now? We have this here, can trade around here, then here you need to come back down, not getting past this level. Okay, then we break up there. That's what we're supposed to see. But look at what happens. Break of structure, our next expected break of structure is up here. Okay, now we have no valid change of character. This is just a liquidation. I told you, if this candle came and closed below this line, okay, if we had a full body candle come and close this like this, where this come through and close up here, if we had a candle like that, this would be a valid change of character. Same story all over and over. Either a change of character or a break of structure. It will always be the same story. Okay? Now, it did not. What happened? It came through up here. It went through up here. When you have such, this is called an inducement. When you have such in the middle of a trading range, let's not overcomplicate it. We're going to get there later. Now, when you see this point, okay, don't think it came because of this. It came here. There is a reason behind this market being choppy like this until it breaks structure here. Okay? Before it breaks structure up here, there is a reason to us why it came, tapped this region, made another point that is almost equal. You see this point A and B are equal. Then there is a reason to us why it came, did this, past these two. This is called liquidity or inducement. This is called an inducement. An inducement is a trap that layers you into the market. Okay, so if you don't understand those traps, it's going to hunt you out. It comes, there is a region around here which you don't, those who are new here, there is a region here which you've not seen before. No margin codes needed. The market, you just identify those points. The market comes, kicks in, okay, and then moves up to breaking this point. So that means if you entered from this region, you would have taken, this is 12%. You don't put 2%. You don't put 3%. It is 12%. Right? It is 12%, not 1%, not even 2%, but 12%. That's if you know how to flow with the market. If you don't know, you would have come here, you see these red candles, you see the market is moving down, then it has started moving up, you get disorganized. But there is a better entry for you at this region. You enter, make 12%. If you have the assurance of the market at least going up and you risking less, because in the future market there might be a loss, there might be profit. Okay, if you position yourself well, let's say you took a long position, when you enter from here, this green light is the take profit or where you're making profits. Okay, now this red is where your stop loss or how much you're willing to lose stops. All right, now when you understand these markets, there is no need to get liquidated, because when the market get to a certain point, okay, that position gets invalidated. Why would I look for a buy when I have something like this? So why would I look for a sell when I have something like this that is being respected to buy? And then why would I buy if I have a change of character here? All right, if you have a change of character, then you're making the market is moving down. You're not going to make anything unless you know the critical points where you're going to enter. You risk less, you make more. This is 12%. But when we go mathematically, because of the assurance we have that the market is going up, okay, let's calculate this before we go in further. Let's see. You have the assurance that you have an assurance that the market is going to move up. Okay, you have $100, you put a 20x leverage. Okay, that means you have access. This is what I was telling you before I started this. in this market you have access to a lot of capital, even if you have less capital. But what will push you out of the game is how much knowledge do you have to utilize the capital in there. Look at this. You have $100 on your Binance or on your exchanger. You go to your Roku, you put 20x. You pull the whole thing 20x. That means you have access to capital worth 2,000. All right. Now, any percentage you make is not calculated on $100, but it is calculated onto the 2,000. That means you have access to 2,000 as the money opening up your position. If you make 12% of your $100, you're making $240. You have a capital of $100, but due to knowledge, due to the patience of waiting for the market to come at a specific zone, you're making $240 in a single trade. Even if you trade this, even if you get 2 trades a month times 2, that is $480 for sure. And you're able to survive on that. Can't that amount create a difference for you? If it's recurring, like it's coming every now and again, if it's coming now and again, wouldn't you make a profit of it? Okay. Now, I think we're time bad. For today, we can stop there. So tomorrow we are going to proceed from here until from Monday to Friday, 7 p.m. Uganda time, Uganda time. We're always going to be here for the same concept. Okay? For the same concept. And I assure you, if you give yourself time, okay? If you give yourself time to understand this concept, you will never lack. And then before you close, there are some people who are saying, where can I get the book? The book is, contact me on, let me give you the number. It's +256. That's my number. +256 707 830 226. That's my number. Please contact me on that number. The YouTube channel is Earn Money Daily. Okay. Earn Money Daily. All time frames are allowed. Now, sorry, let me just do this real quick. Those who want the book, please message me on that very number. I put it in the chat. There is also one-on-one classes, but if you feel like this is enough, you can still always come through and practice here together. Now, we are going in for the questions and we see how we can wind up this class. If you have any questions, I'm just allowing 3 to 4 people to ask, then we proceed with, we see how we can end this and proceed tomorrow. Mr. Ask to unmute. Mr. Twinomsha Jovan, it's you.
All right. My leader, I don't know if my voice is on well. Good evening,
it's well.
sir.
Good evening too.
Well, my question goes to when you said that when we're marking, by the way, I've been following from South Africa. Thank you.
Yes, please. Thank you.
That when we are marking we want to to cage up, okay, to cage up the space, we
Okay.
have to follow the high low, rather the low high, okay,
Okay.
of the previous high or of the previous low, right? And then on the next page we follow the higher high of the previous. Doesn't it need us to follow where the price, the current price is, or it doesn't matter?
Of course, you
Thank you.
have to use the current price. You
Okay.
start with the recent structure formed. If it was bullish, with proof that there is a valid break of structure, that means the next move will so either break the higher high, okay, or lower high. There are two things that it's either going to do: either break the higher high or break the lower, the
Ah,
higher low. All right.
okay. Mm.
Now, if you start caging, you wait. What is the price going to do? If you have already caged before, this is the thing.
Ye-
This is the thing. Are you seeing my screen
Yes, sir.
now? When you have this, okay, this is to
Mm.
prove that the market is going up.
Trend.
All right, this is an uptrend already. You can just see it from there because we have break of structures.
Oh, yes.
Let me do this. Let me get my. We have this as a break of structure, another break of structure.
Oh, yes.
All right. Now, what you have in the head, the assurance you have is that this area, do you see this?
Yes, sir.
Is protected. It's a protected low. Why is it protected? Because it broke structure. The buyers are aiming at having this price leg protected, not to surpass below this line. Because when it surpasses this line, another volume of sellers will come in to have more sales than buys.
Right.
Right now, when you catch this area, okay, there is something called premium and discount. Your task is to wait for this market to come into your discount zone. We're going to see that tomorrow or any other day. Into your discount zone, get involved in here and then get ready to break this point so as to continue in an uptrend. Are we
Okay.
at Pana?
Yes, sir. Thank you very much.
You're welcome. Now you're done. Then Elvis, I'm just going to allow 2 questions.
Okay.
2 to 3.
Good
Yes,
evening,
Elvis.
sir.
Good evening, Mr. Elvis.
Thank you for the lesson. I've been trying to trade this smart money concept, but I'm
Okay.
hoping I'm going to learn more from here. Now,
Yes,
my
sure.
exact question is, me, I know how to mark the
Okay.
the trend. I can identify the trend, but what is the best time frame to trade this strategy? Can I trade it in, let's say, 15 minutes, and I see the trend in 15 minutes, or I have to confirm, let's say, in 1 day or 1 week or 4 hours?
Now, there's something called time frame alignment. Okay.
Okay.
There is something called time frame alignment. It's going to happen every day. That's how the market moves. If the 4 hours, if the 4H, okay, is in an uptrend, okay, to
Okay.
some point when it starts pulling back around these regions, the 15 minutes is going to be
In the
what? In a
downtrend.
downtrend. So
Okay.
your purpose is to come and sit around your premium zone, sorry, your discount zone, with a
Mm.
reason why you're sitting there. we're going to look at something called a breaker block, an order block, a mitigation block. Okay? Where you sit and wait peacefully for the market to come tap there with just a blink, and then you start moving. Just look at what happened here. This market, look at what happened. It took this market 1% or 2%, 1.2. You entered from here. No, nothing but a profit of 12%. That means there is a person who came and waited onto this region because he or she knows why there are these candles. Let me show you. There are some, if you observe very well, here, there are some spaces around these areas. Okay? There is a significance, there is a reason to us why these spaces are in there.
Is
All
that
right?
the fair value gap?
Those are fair value. There is a reason why they are there.
Okay.
All right? We're going to tackle them, don't worry, okay? We're going to see
All right.
how, yeah.
Okay, thank you.
You're welcome. Next, Mr. Muchibi. Sorry, Mr. Is it Elvis?
Yeah.
Muchibi Peter. Okay. I think this is the last question. And we see
Yeah.
up tomorrow.
I was waiting for something here.
Okay.
We are going bullish. Yeah.
Mr. Muchibi Peter, please. Hello.
Yes, Mr. Kenneth, thank you so
Yes,
much.
please. You're welcome, sir.
Yeah,
Okay.
my question is about
Okay.
the entry point.
Okay.
I got lost when you placed your entry because from after identifying the change of character, there I got lost. I didn't get it clearly how you
But
chose your
I've not talked
entry
about
point.
entries. I've not talked about entries. As just giving an example of breaking of structures or mapping out. Okay. As just mapping, I had not talked about anything concerning entries.
And this is
Okay.
not a very breakable structure.
Thank you so
I
much.
just gave this as an example. Right?
Okay.
It's not valid. So
But we're going to look
what
into
does
entries
the
further.
candle?
Please, there's John. Please stop writing in my chat. Okay. Next, is
All
there
right.
anybody else? No one else. Okay. So I think we're going to resume right where we stopped tomorrow. We're resuming with the market structure, and then we're going to peruse through all.
Are you
Okay.
sleeping?
Please, who is on? Muchibi. Elvis. Mute your mic. Something is being cooked there. You don't want to intervene. So those who want my email is there. You can inbox me up. The book is here. The number is there. Check 256-707 830-226. Okay. See you tomorrow, guys. Same hour, same time span for us to study through. Have a blessed evening.